Hi traders, you're welcome to my video on the swing index indicator. This is an indicator that helps you to read signals and identify good trading opportunities. So stick around to the end for some pro tips on maximizing the effectiveness of the swing index indicator. And don't forget to smash that like button and subscribe for more trading strategies and insights. Okay, now this is how the swing index indicator looks like. Okay, now you might be asking, what exactly is this indicator and what does it do? Well, it is a momentum based indicator that helps traders to evaluate the strength of price movement by analyzing the relationship between the current and previous bars. Okay, so unlike traditional trend indicators, the swing index does not just follow price. Instead, it calculates and quantifies momentum, helping traders anticipate potential trend reversals before they happen. Now, one of the biggest advantages of this indicator is its ability, you know, um, to measure market swings across multiple time frames and asset classes. So whether you are trading Forex, stocks, or commodities, the swing index indicator can provide valuable insight into the market's direction. Okay, the swing index indicator generates its signals through bar color and height, making it easy to interpret at a glance. All right, so when you notice a green bar, it signals positive momentum, which could indicate the start or continuation of an uptrend. And take note of the height of the bars. Longer bars indicate stronger momentum. All right, so we can see that when this bar popped up to a great height, it showed that there was a high chance of a bullish move happening because the momentum was strong. And guess what? Shortly afterwards, we actually had a notable buy move. Here again, you can see that there was a significant spike in the index, and you can see that we had a significant upward move. Although along the line, the bars were short, but they remained green, maintaining the direction of the trend. Then when the bars started changing to red, it showed that the bullish momentum was getting weak, and that was why we had this consolidation. And then you can see when there was a spike in the red, height, you can see that we had a significant decline, and now we are having a spike in the green height. So there is a possibility of us having a significant upward move as well, at least maybe to the nearest resistance or thereabouts. Okay, maybe to this zone. Yeah, this zone that was broken. So there could be a possibility of price getting to this zone, at least if this bullish momentum should remain strong. All right, so basically a green bar signals positive momentum while a red bar signals negative momentum. Then the height of the bars, they also play a crucial role. Taller bars mean stronger momentum, while shorter bars suggest weak price movements or consolidation. So instead of guessing where the market is heading, traders can use these visual cues to confirm trends and anticipate potential turning points in price action. Now let us go over how to use the swing index indicator, in a few different ways for your trading strategy. One of the ways is for confirming trend direction. Before entering a trade, you can just check the color and the size of the bars. If you are looking for a long position, just wait for multiple green bars with increasing height to confirm momentum. Then for shorts, look for multiple red bars indicating downward pressure. Then you can also use this indicator to identify reversals, because when a strong trend starts to get weak, you know, the bars will shrink in size, like what happened here, right? This bullish momentum was getting weak, the bullish move, and you can see the bars started shrinking in size. So that can be a signal that the momentum is slowing down and the potential trend reversal could be coming. Then you can use this indicator with other indicators as well. The swing index works even better when combined with moving averages, support and resistance levels, or RSI, for the purpose of confirmation, just for additional confirmation. So that's going to help to reduce false signals and increase confidence in your trades. Now, one of the biggest advantages of this indicator is its simplicity, okay, because it provides clear signals without cluttering your chart. It is versatile, working on any time frame and across different trading assets. Also, it helps traders avoid choppy markets by identifying when momentum is strong versus when it is fading. So by adding the swing index indicator to your trading toolkit, you can make better informed decisions, confirm trends, and identify reversals before they happen. Okay? Also, take note of risk management. Irrespective of the strategy you are using, risk management is a necessity. Don't trade with an amount you cannot afford to lose, and do not risk more than 2% of your account balance in a single trade. It's not advisable to do that at all. Okay? And I'm going to recommend the risk to reward ratio of 1:2. For example, if you are risking 10 pips, potential profit should be at least 20 pips. If you're risking $10, your potential profit should be at least $20. That's a risk to reward ratio of 1:2. Okay? So it's important to take note of that. Ensure you always mark possible reversal points on your chart. Those are also going to be helpful. Okay? Mark out your support and resistance zones, and then watch out for the spike in the bars of the swing index indicator. All right? The signals are quite straightforward. So that is a wrap on this breakdown of the swing index indicator. If you found this strategy useful, make sure to like this video, drop a comment below, and of course, subscribe to the channel for more expert trading insights. Also, hit the notification bell so you never miss an update. Thank you for watching, and I'll see you in the next video. Happy trading.